I run a boutique tax CPA firm in Canada, and I get front row seats to the most common and costly mistakes that small business owners make during tax time. And in this video, I've summarized the top 6 mistakes so that you can learn from others, reduce your tax bill, and put more money back in your pocket. So let's get right into it. Mistake number 1, not keeping track of your expenses. Most business owners find it easy to track income. After all, it's money coming in. But where they often fall short is tracking your expenses, which is just as important. It's important to track expenses properly because you could claim them as business write-offs, which means a lower tax bill, if you've actually recorded them, that is. When you don't track your business expenses throughout the year, you miss out on valuable write-offs. And let's be honest, the main reason business owners fall behind on this is because of the shoebox of receipts or the administrative burden of having everything organized in one place. But don't worry, I've got the perfect solution so that you never miss another write-off again. Let me introduce to you Dex, the #1 rated tool for small businesses for tracking receipts and invoices without the headache. Dex is more than just a receipt scanner. It's a complete bookkeeping automation platform that helps you capture, categorize, and organize all your business finances automatically. It works in multiple ways, but here are some of my favorites. You snap a picture of your receipt of invoices with the mobile app, then Dex pulls out key details like date, vendor, and amount. And if you got email receipts or invoices, you can forward them to your custom Dex inbox. And if you prefer uploading from your desktop, you can drag and drop bulk files in seconds. You can even download from WhatsApp and share directly into your Dex app. Once your documents are in, Dex automatically extracts all the relevant data and syncs it to your accounting software like QuickBooks and Xero. This means no more lost receipts, no more data entry, and no more missed deductions. Plus, Dex supports multi-currency, sales tax tracking, and gives you access to real-time reports so that you always know where your money's going. And because everything is stored securely in the cloud, you and your accountant have instant access to your financial records anytime, anywhere. It's like having a digital assistant who keeps your books clean and tax ready so that you could focus on actually growing your business. So if you're looking to simplify tax season, this tool is a total game changer. Check the link in the description box down below for an exclusive offer and try Dex for yourself. Mistake number 2, not realizing profit matters more than sales. Too many business owners get caught up in the sales figure like, my business makes $1 million in sales. But here's the thing, sales don't tell the full story. What really matters is profit, the money left over after expenses. Let's look at an example. Business A makes $1 million in revenue, but spends $950,000 in expenses, which equates to $50,000 in profit. Business B, on the other hand, makes $100,000 in revenue, but only spends $20,000, which equates to $80,000 in profit. So despite the flashy revenue, business B is actually $30,000 more profitable than business A. And that's $30,000 more in your pocket. Now, here's why this matters for tax season. Your taxes are calculated based on profit, not sales. And while higher profits are great from a business perspective, on the flip side, it also means higher taxes. This is why it's so important to proactively plan for tax season so that you could keep more of the hard-earned profit. And this leads into our next mistake, mistake number 3, waiting until the last minute to think about taxes. There's a reason they call it tax season. Most people wait until the last minute, then scramble to file everything. But what if you got ahead of it? In my experience, the clients who pay the least in taxes are the ones who plan during the off season. They reach out to me months in advance to ask, what can I do now to reduce my taxes next year? That kind of proactive strategy gives you clarity. You'll know how much tax you'll owe and take steps throughout the year to minimize it. If you're trying to reduce taxes during tax season, it's already too late. The tax year has closed. You can't undo what's already been done. Since taxes are one of your biggest expenses, why wouldn't you plan for them like you would do with your other business expenses? Planning ahead can mean the difference between a hefty tax bill and shaving off thousands of dollars with just a few simple moves. Mistake number 4, not staying on top of your tax obligations. Missing installment payments or filing late can cost you, literally. In 2025, the CRA is charging interest at 8%, which has just recently come down to 7% for this quarter. That means if you miss your deadline, you could be paying hundreds or even thousands of dollars in penalties and interest. And here's the kicker. Those penalties and interests are specifically not tax deductible. So not only are you losing money, you don't even get a deduction for it, unlike other penalties and interest you may be charged at the bank, which are tax deductible. So what is the no-brainer way to fix this? Automate your installments and stay on top of your bookkeeping year-round. File your taxes early and skip the stress. Mistake number 5, not understanding your business taxes. At the end of the day, you, the business owner, is responsible for everything filed with the CRA, even if an accountant prepares it. I've seen clients come to me after their previous accountant made mistakes, and unfortunately, the CRA holds the taxpayer liable, not the accountant. That's why it's so important to understand the basics of your business taxes. Don't just blindly hand everything over to your accountant. Ask questions, get involved, give your input, and make changes when necessary, since you know your business better than your accountant. That way, if anything ever goes wrong, and knock on wood, it doesn't, you're not completely in the dark. Mistake number 6, not hiring the right accountant. Not all accountants are created equal. There are CPAs or chartered professional accountants who are licensed professionals, and then there are general accountants who are not licensed. If you're hiring someone, make sure that they are a licensed CPA. Not all accountants have this designation, and even within the CPA world, not all CPAs specialize in tax. Some focus on audit while others on financial reporting, and even within tax, there are different specialties like real estate, mining, public versus private companies. You want someone who's not only a CPA but also understands your industry. At my tax firm, we specialize in service-based small businesses like content creators, coaches, consultants, and medical professionals with annual profits between $100K to $2 million. If that sounds like you and you want to learn more about how we can help, make sure to check out the description box down below. And if you want to learn more about business taxes or self-employment taxes, make sure to check out my video right here. Thanks so much for watching, and I'll see you guys in my next one. Bye!